Welcome everyone to this Resource Connect Asia Commodities webinar focused on the uranium sector. The purpose of the webinar is to provide unique insights into the sector from a thematic point of view, plus showcase a range of ASX listed companies from within the sector. The keynote presentation will come from James Bullen, Analyst at Canaccord Genuity and co-author of the recently released third edition of the Junior Uranium book. We also have found 4 cracking companies operating in the sector who will present today. Haranga Resources, ASX code HAR, represented by Peter Batten. Elevate Uranium, ASX code EL8, represented by Murray Hill. Toro Energy, ASX code TOE, represented by Greg Shirtliff. And Aura Energy, ASX code AEE, represented by Andrew Grove. Each company will give a 10-minute presentation, which will be followed by 5 minutes of Q&A. At the completion of the presentations, James and the presenters will participate in a panel session, looking particularly at the macro fundamentals of the uranium sector. Where are things now and where are they likely to go? And from an investor point of view, what should you be looking at? Remember, the webinar is interactive. We want you to ask questions of the presenters. So while they're presenting, think up some questions and submit them using the Q&A button on your screen. There's a box at the bottom. Write your questions in and get them through. To provide our keynote and to set the scene for the webinar, I would now like to welcome James Bullen, Resource Analyst at Canaccord Genuity. James, over to you.
Well, thank you, David, and thanks for giving me the opportunity to speak today at this Resource Connect webinar. As David mentioned, I'm James Bullen, Research Analyst with Canaccord Genuity, and I've been given a meagre 10 minutes, so we're going to skip through that first slide and also the disclaimer there, and I'll let you read those in your own time. So let's start to set the scene here. So nuclear energy provides about 10% of the world's electricity needs. It makes up about a quarter of the globe's low-carbon electricity, and it's the second largest supplier of low-carbon electricity to the world, behind only hydro. And it does so at a fraction of the space required for the likes of solar or wind. Now, despite this importance, uranium doesn't command anywhere near the profile of other critical minerals. And while that is slowly changing, there is a long way to go in our view. Prices crashed, mines closed, and we remain near decade lows for supply. As you can see here, we've got a 30 million pound supply deficit at the moment, and that's even once secondary supply is accounted for. So make no mistake, the supply picture is a fragile one in uranium. 60% of primary mine supply is operated by either Kazatomprom or Cameco. Now recall, nuclear energy supplies 10% of the world's electricity needs, and we rely on 2 companies to deliver over 60% of our U3O8. That's next level supply concentration. And that concentration and those concentration risks really became apparent during COVID when there were outages in Kazakhstan and we had Cigar Lake in Canada shut down due to the virus spreading through there as well. Now, more recently, it's been the coup in Niger, Kazatomprom guidance cuts, and Russian sanctions, which have reinforced the market fragility that we're talking about. And this situation in our mind is going to get further tested when Kazatomprom come out on 23rd of August and they provide us with their guidance. And I think we're going to see 2025 production guidance downgraded as well. And compounding this, we now also have the re-emergence of overfeeding, which we're going to touch on later, and the decline in mobile inventories, particularly amongst the utilities. If we flick our mind to the demand side, things are far more robust. We've got bipartisan support in the US for nuclear power. We've had multiple life extensions there, and we're even talking about restarts of old nuclear power plants. And in Europe, we've got the inclusion of nuclear in the sustainable taxonomy. While when you look at the non-OECD, everything is starting to improve there as well. We're seeing a huge number of new builds. So we're forecasting 3.6% per annum out to 2030 in terms of demand growth and 3.2% beyond. And it's all getting driven by key megatrends: decarbonisation, energy security, and energy demand growth. So those are all the reasons you require to remain bullish on where uranium demand is heading. All up, we've got 61 new reactors that are currently under construction in the likes of China and India, and they are not slowing down. While in the West, we're feverishly trying to extend the life of our low-cost, low-carbon existing baseload nuclear plants, outside of Germany, of course. But if you look at even the likes of California, right? Diablo Canyon last year, that was scheduled to shut down, but it got a extension of its life out to 2030. So now it's going to produce through to, for 50 years. That's the good news. The bad news was when it went to go out and find the uranium that it required to support just part of that life extension, it was around about £3 million. It ended up driving up the spot price by $5 a pound. So it's a tight market. And we do not at this point include SMRs in our analysis. If you just move to the next slide now. So that improved pricing has started to see the supply chain respond. We have seen restarts. Paladin, Boss obviously have got theirs going, but there hasn't been a huge number of FIDs for greenfield new builds, and that's because uranium is difficult. There are no ticker tape parades when you go out there with new uranium developments. Like think about NextGen in Canada, right? So they've got the Arrow deposit. That is a tier 1 deposit in anyone's language. It's going to be supplying the market with circa £28 million, and it's going to do so at a cost of less than US $10 a pound. It was discovered in 2014, but it's not going to be in production until now. It's forecast 2028. And that's because it is difficult to get one of these new greenfield developments up. Environmental approvals are difficult. Regulatory approvals are tough. Financing's tough. Negotiating with your TOs or your First Nations is extremely difficult. This is not lithium. It's not a supply chain that reacts quickly. I mean, you can't even mine uranium in Queensland, and you have to have a historically approved project to mine uranium in WA. Those are two premier mining jurisdictions, and you can't even do it. But we are very, very reliant, as you can see on the chart on the bottom right there, on these new greenfields to support the supply that's required. And if they are pushed out to the right, those new greenfield supply projects, and history suggests that they will be, we're going to see pricing a lot higher than we are today. If I can go to the next slide, thanks. So let's have a look at the nuclear supply chain a little bit more deeply and think beyond just the mining side of the equation and look at conversion and enrichment. And here you can see that Russia dominates both. Indeed, it was actually encouraged to do so by policies such as the megatons to megawatts that the US put in place. Now, they weaponized natural gas, and there is every reason to believe that they could weaponize conversion and enrichment as well. So that is cause for concern, and it means that we need in the West to move quite quickly to try and remove them, even in the absence of the sanctions. Let's assume that waivers come through and we don't know whether they will or not. We still need to move away from Russia and move away from Russia quite quickly, and there is going to be a price to be paid for that. If I could just go to the next slide. So here's how the prices have been reacting to what we've been seeing, and it's pretty dramatic, right? You can see that conversion has shot up to all-time highs, and you can see that enrichment has also moved up. Now, it's meant that the utilities have been focused primarily on conversion and enrichment, but it also has enabled them to start to think about things longer term. And so if I can just go to the next slide now. So here is the fuel train, and it takes about 18 to 24 months to move from U3O8 all the way through to a fuel rod. So on the mining side of the equation, things are slow moving, but let's start to think about enrichment and the price that you're now paying. As we mentioned, it's gone up to about $170 per SWU, whereas when I started covering this space all the way back in 2017, it was sitting at about $40. What that's doing is it's driving people to move away from a process that's called underfeeding, where you essentially try to get more blood out of the figurative stone despite how much work it required. Nowadays, because we don't have an overcapacity enrichment, we're having to move to a process called overfeeding, where they feed more U3O8 and they're willing to accept far higher 235 in the tails assays. We can just go to the next slide, please. Now, this has a big impact We're currently including in our supply and demand a requirement for an additional 10 million pounds of U308, but it could easily be double that. And now you think about, we've already got a 30 million pound shortfall. We've got uncertainty around when the new builds in terms of the mines will come online. And now you've got overfeeding occurring. All of that's going to be providing upwards pressure on the price in our view. Can I go to the next slide, please? Financial players, we haven't discussed them much, but they have definitely occupied people's thinking and their role that they have been playing in the price action in the uranium market. So here we've got Sput and how they've built up their inventory of U308. Now you can see there that they did most of their heavy lifting in 21 and 22. That's when they bought most of their product. Now, over that whole period, we only actually saw the uranium price move upwards by $18 a pound. Now, in 2023, in contrast, they were only out there and stacking 3.9 million pounds, pretty small for those guys. But the price went up in the spot market by $43 a pound. Okay, clearly they're having a role in tightening everything, but we still maintain the belief that the price is moving because it needs to incentivize new supply to get out there, not financial gain by financial players. And anyway, if I can just go to the next slide. The spot market is important and it does drive share prices and sentiment, but the most important market remains for our miners, the term market. And I'll admit, this year, 2024, you can see the year-to-date numbers there. It has been pretty quiet. Now, in 2023, we saw 160 million pounds contracted. That was the highest level since 2012. And that did include a 50-odd million pound contract with Ukraine, but there are also a large number of European and Chinese contracts that were in there. And European, if you have a look at inventory levels for the utilities, Europe, they're about 100 million pounds, US about 100 million pounds. So that's circa 2 years of forward coverage. But when you go back and you have a look at it, okay, 18 to 24 months to go from U308 through to a fuel rod, well, that's not a huge inventory level for them at all in our mind. So we think that they are going to be a lot more active in the second half. They're going to have more clarity around how the waiver system in the US is going to work, whether they can actually source Russian supply because they can't get it from anywhere else. We're also going to have the WNA conference that occurs in September, and historically that has really kicked off contracting season for the Americans and the Europeans, and we think that that could be highly, highly active this year. And that in turn could result in additional price action. If I can just go to the next slide, please. I did want to sort of talk a little bit here around what is a more of an emerging theme in the uranium and nuclear market, and that's the interaction between big tech and small, and in some cases, traditional nuclear. So we know that data centers are an increasingly important part of our electricity consumption mix. They're in there in the US at the moment, sitting at about 3%, but they expect them to grow to 8% by 2030. And if you start to layer in AI and what that could mean for it, and the requirements of that, it gets even more dramatic. Now, these are big companies that have to do sustainability reports, and they clearly take their carbon footprint very, very seriously. And so what we have been seeing more recently is deals by some of the larger data center providers, talking mainly about AWS, Amazon Web Services to begin with, who've done deals with Talon Nuclear. They're supposedly doing a deal with Constellation to source carbon-free power to support their data centers, which can be provided 24/7 as opposed to the renewable guys. We've also seen a number of leading tech figures get involved in the SMRs. So you've got the likes of Sam Altman, who sits as the chairman of Oklo, and you've got Bill Gates, who sits as the chairman and founder of TerraPower. This is not a thematic that is going to exit anytime soon, and we think it's going to be hugely bullish for uranium demand going forward. Now, I don't have a conclusions page. I'm going to let you draw your own, and I think I'm going to be coming back for questions right at the back end. So I'll hand it back to you, David.
Thanks, James. As I said at the beginning, really there to set the scene, and you've set the scene beautifully, and really given a great overview of the thematic that is the uranium sector and the nuclear power environment that we're in at the moment, and why we're seeing so much interest in this commodity, and the companies that play within it. So on that note, as mentioned, we will bring you back a little bit later in the webinar to really be part of a panel that will talk more broadly about the thematic. So if you've got any thematic questions of James or the other panelists at the completion, we will deal with those at the end. So now I would like to introduce the first of our company presenters, Peter Batten, Managing Director of Haranga Resources, ASX code HAR. Haranga is an African-focused multi-commodity company, with the company's most advanced project being the Soraya Uranium Project in Senegal. To tell us more, I'd now like to welcome Peter Batten. Peter, thanks, and over to you.
Thanks, Dave, and thank you, James, for setting the scene so that I don't have to go through much of it. If you could flick through to slide 3 for us, please. We can start from there. Haranga, that's our dashboard. Haranga is the junior company that's presenting today, and we're quite grassroots. We have a resource, we have a real asset in Senegal, in West Africa, but we are at the lower end, and I guess that gives us the greatest chance of growth. Could you go to slide 6, please? No, keep going. Sorry. And one more. There we go. So Haranga is in Senegal, and that is in West Africa. And when I present Haranga's story to brokers and the public in general, a lot of people are unaware of Senegal. Senegal is a stable geopolitically democracy in West Africa. It's one of the two better countries in West Africa. The other's Mauritania, that Andrew can tell you about later. And Andrew was previously in Senegal. Senegal has just had a change of government quite peacefully and is a modern country, very good infrastructure, and is a modern mining act and regulations, and is a pro-mining country. Next slide, please. So we are multi-commodity. We have gold and we have uranium, but we'll just be talking about uranium today. Our project sits in the southeast corner of Senegal, about 900 kilometres from the capital, Dakar. And what we have is the only permit in Senegal for nuclear fuels, and that is Soraya. So the Soraya was discovered in the 60s by the French as Kojima. Kojima became Areva. Kojima left in the 1980s. Areva came back in 2007, and they stayed until Fukushima. So the French have had a go at this. We inherited a very large database, which was mainly in paper copy. We then went about digitising that. We also put 22 drill holes into that project to confirm the historic data. And from that, we produced our maiden resource. Now, where we are in the area, we have a blanket of laterite, and that masks any signal from the geology below. And the uranium mineralisation is in the geology below. So we've developed a 4-stage exploration process, and it relies heavily at the start on termite mound samples. And last week we announced that phase or stage 1 of our 4-stage process has been completed for the entire permit, and that's regional scale termite mound sampling, and that's what you can see in the image there. From that, we now have some 16 prospects that have come out of that. Next slide, please. So this is our 4-stage exploration. As I said, the regional termite mound sampling has been completed. On the left is stage 2, and these are the infill sampling that we're doing. What we have at Soraya, and has been identified by the French before us, was a corridor of anomalism. North-northeast trending from Soraya. Soraya is the deposit, and so we've now extended that through the termite mound sampling to in excess of 30 kilometres. The regional termite mound sampling has also discovered a number of other locations on the contacts to the west and to the east, and they'll be exciting to explore a different style of mineralisation. This is sodium metasomatic mineralisation. We have uranium in epicyanites, and from that, from the infill stage 2 sampling of termite mounds, we now have 11 auger drilling targets. So once we know the termite mounds only indicate that there's anomalism below the laterites, and then we have to locate where that anomalism is coming from and hopefully the orientation of that anomalism. At the moment, the process that we're using is auger drilling. We drill through there. We've had a go at a couple of them, and the most successful has been Sanella. We are just completing the auger drilling at Sanella now before we move on to the other 10. But we've got a lot of work ahead of us, and there's a lot of prospectivity within those areas that remain untested. And out of those 11 there, the majority don't have any drilling in them. We did do some drilling last year. We drilled mainly at Soraya. We have a maiden resource there, and we upgraded that resource with drilling. We also poked a few holes into Diobe, Mandancoli, and Sanella, and we had a little bit of success at Sanella. Next slide, please. So that's the drilling program that we did. That's on the left-hand side is the surface expression of the resource that we have, and in the section you can see where we hit the mineralisation within the model, and it's quite good confirmation. We also, as I said, we hit mineralisation at Sanella. We hit uranium mineralisation in 5 out of 6 RC holes that we drilled there. And the best was about 8 metres intercept. I wouldn't call it a discovery, but it's certainly very good. A good start. And we're back there, as I said, with the auger drill, trying to determine where that anomalism is going to and how to line it up for the next lot of drilling. Next slide, please. So this is our MRE, our mineral resource estimate. The maiden estimate came out in September, and it was based on the 500 odd holes that we had in mineralisation from the French and the 22 diamond holes that we did. This is an upgrade. The original maiden estimate was 100% inferred, and what we've done now is we completed some metallurgical ore characterisation work, which indicated that we can certainly extract uranium from the rock type, either by acid leach or by alkali leach, both quite good recoveries. So along with that, and along with the extra RC drilling that we did from September to March earlier this year, we have got an upgrade of the mineral resource, and therefore we now have 6 million pound of the 16 million pound in the indicated category. It might seem a bit insignificant, but the importance of that is that we can't undertake any scoping or feasibility studies on 100% inferred. There has to be a component of indicated to commence and complete any of those studies so that we can wrap some economics around this and to see how big it has to be before it becomes a viable operation. And that's what we've been doing to date. Having said that, we are now entering into the rainy season, so most of our field work has stopped and won't recommence until late October at the earliest. And the plan is now that we will drill out Soraya, and we will through that we will then go into feasibility studies, and we think that we will be able to grow Soraya quite significantly, and we're hoping that we will get to the point where it becomes economic. Next slide, please. So that is the story, the Haranga story, and we're in the takeaways from this, I guess, are that we are in a stable geopolitical climate in West Africa that is pro-mining with modern mining laws, and that they adhere to rule of law. We also have a real asset with 16 million pounds at a very good grade, 555 ppm, and that will grow. So outside of that 16 million pounds and whatever it becomes, we also have the potential to quite substantially grow our resources is we now have 15 prospects, of which 12 have never had a drill hole in them. And the majority, at least half of them, are new discoveries by us. So it's an exciting time at Haranga, and we're looking forward to this next year and working our way through our 4-stage exploration process and getting into the point where we're doing the exciting stuff. And for me, the exciting stuff is ASU drilling. That will be the start of the truthing of what we see from our current exploration results. So that's the Haranga story. I think that we're at such a low starting price that, and we're at the start of what I see as a uranium run. I think that there's a lot to be said for Haranga's opportunities. Thanks, Dave.
Thanks, Peter. So just talk us through the exploration technique. So obviously the termite mound exploration, sort of early stage exploration opportunity, how was that even thought of in the context of the development of this project?
It's a very common process in arid environments. We use it in Australia, and basically, if you've got transported material, and this laterite that we have, the laterite blanket we have has been transported from elsewhere, so you can't rely on any information that comes out of the laterite. You need to get below it. A quick and easy way of doing that is sampling the termite mounds. The termites go to any tree out there. We're sampling on a 250 by 50 metre infill grid. In that, you would have a choice of at least 3 termite mound samples that would be very close to the coord the GPS coord that you're using to sample. You sample that and you sieve out any laterite that's in there, and then you process the other material, which is basically a soil sample. The problem is we don't know where the termite has brought that sample from. The termites burrow down for moisture and to air condition their mound. And that's exactly what happens in the Northern Territory and the Kimberley of Australia. So that's the process. It's commonly used process.
The question here is, do you have to have the hunch first? So what draws you to using that as a technique? Is there something a step before that gives you a hunch of, hey, I think there's something below this that we need to go and look at, and here is our avenue to do it? Or do you start with, well, here's the mounds and let's have a crack at those and see what's there?
Well, for Haranga, it's a little bit of both. The French had already identified a 25-kilometre long corridor of anomalism, and so we undertook termite mound sampling within that. But we also did regional termite mound sampling on a 1,000 by 100 metre basis, and we covered the entire permit with that. That we finished that this season, and so that we won't have to go back and do regional termite mound sampling again. We have all that data that was there, and from that we've discovered another 6 new infill grids that will be undertaken next dry season.
Good question here. You mentioned in your intro that you are multi-commodity. What's the commodity that's standing at the front at the moment? Is uranium now coming to the fore?
Yeah, uranium. When I joined the company in September, and the reason I joined the company is that the focus is on uranium. The gold is a good asset. We're sitting in the Birimian greenstone belt in West Africa. Within Senegal, there is at least 4 operating gold mines there, owned by foreign companies. And within the zone where we are in the Birimian, there's 40 million ounces within that. But we've got early stage prospect. We've got anomalous gold from termite mound sampling, and we're about to go and drill that with an air core. And that will give us an idea of what we have. So the potential for a deposit there is good. It's on the back burner for us. We're focusing on uranium because we think it's time. The timing is good for uranium, and that's what we want to concentrate on.
Perfect. Thanks, Peter. We'll welcome you back a little bit later in the webinar to sit on the panel. With your experience, there'll be some great insights into the wider thematic that is the nuclear and uranium sector. So, Peter, thanks for your presentation. Now I'd like to introduce Murray Hill, Managing Director of Elevate Uranium, ASX code EL8. Elevate Uranium owns significant uranium resources in Namibia and Australia, and has active exploration activities in both countries. To tell us more, I'd like to welcome Murray. Murray, thanks for your time.
Thanks, David, and thanks for listening to me and watching. So next slide, please, gents. So we're a uranium-focused exploration company with a diversified portfolio of assets in Namibia and Australia. We've got 104 million pound of our 152 million pound sitting in Namibia, and 48 million pound in Australia, through a number of projects in those. Next slide. So we've heard James talk about nuclear and the requirement for more uranium and the expectation of the high uranium price. So I'm not going to dwell on this too much, but basically reiterate what James said. We have a huge demand. Excuse me. Sorry, the man flu's got me for the last few weeks, David. So the last, sorry, that's throwing me too. We have a huge demand for nuclear going forward because we're looking for carbon-free energy, as James pointed out, and we have a huge shortfall for uranium production. So the only way to incentivize uranium production is for the uranium price to go north, and that's where we think it's going to go. So next slide. So they're the things that we can't control. What we can control is what we do as an exploration company, and we have the largest land portfolio in Namibia, and we chose Namibia because it's a great uranium mining jurisdiction, the third largest producer in the world. The history of uranium mining there, Rossing have been operating since 1976 on a continuous basis, so there's 48 years of continuous operating. So 2 generations of Namibians very familiar with uranium. 3 projects developed in the last 16 years. Orano, the big French company, you heard talk about Areva and Kajima previously. Orano is their new name. Have the Trikopi project just south of our Marinika project. Husab, owned by the Chinese, and Paladin's Langer Heinrich operation just north of our Copies project. So those have been developed in the last 16 years, and 2 licenses just granted in the last 6 months to Bannerman and Deep Yellow. So it's got a history of uranium mining, it's got a history of projects being developed, and it's got a history of recent licenses being approved. So a great jurisdiction for uranium and a great reason for us to be in the country. It's a country we've made 4 discoveries in 4 years on our large land portfolio. And the first of those discoveries on the next slide is the Copies project. The Copies project is the first one, as I say, we discovered of the 4. We've now established, we've got 20 kilometres of mineralisation. We've got a 58 million pound resource over this area. The all-in cost to discover this project from the time we applied for the tenement to a 58 million pound JORC resource is 6.8 cents per pound. The current uranium price sitting at $85 a pound. I don't think I've heard anybody mention 6.8 cents per pound to find a uranium project anywhere in the world. So that's an exceptionally low exploration cost. And the reason being is that we're drilling holes that are generally about 28 metres deep. They cost about $1,000 to drill, RC drill holes. And we're getting through, we've got 5 drill rigs working in Namibia. Each of those drill rigs work from Monday to Friday. They drill 5 holes per day each. So 5 days a week by 5 is 25 holes a week. 5 rigs by 25 is 125 holes a week. We're getting a bit more than that at the moment, but that's about what we're budgeting. 125 holes a week is a lot of holes to be drilled in any jurisdiction, alone in a jurisdiction where it's only $1,000 a hole. So it's an exciting project, and one of the reasons why I like it is, you can go to the next slide, is the proximity of the ore to the surface. So 50% of the ore is within 7 metres of surface, with the bulk of it within 18.5 metres of surface. That means the strip ratio is going to be low. The mining costs are going to be relatively low. It's not a deep project, and hence require huge costs associated with it. So a very, very inexpensive exploration, very inexpensive mining. And then when you throw the upgrade process on top of that, if you can go to the next slide, we have a low-cost operation. So upgrade is a process we developed in-house. Excuse me. What it does is it commonly used unit operations to concentrate the gangue mineral, the mineral without uranium, and reject that. That's counterintuitive and hence innovative and patentable. So we have 3 patents around the world on this project process, and The commonly used unit operations that we come across, you'd find in a gold, base metal, and mineral sands plant, but they're configured unconventionally. So what we end up with is less than 5% of the mass goes into a concentrate, which can be leached. And now, because we're dealing with a calcrete ore, generally you can't leach it with acid, you have to leach it with alkali. Because we reject the calcite, we then can leach it with acid. Acid ambient temperature, alkali 93 degrees. So I know which one's easier. Acid's a lot easier. So because we rejected so much mass on the way through, you can imagine the unit operations are getting smaller and smaller, hence the capital cost and the operating costs both decrease. So compared to conventional, we're about 50% for CapEx and OpEx. And now you can imagine you've got less than 5% of the mass in a concentrate. That gives you optionality as to what you do with it. Do you leach it yourself and refine it, produce yellow cake? Or do you take it to a third party and leach it and refine it yourself? You just heard that Rossing have been there for 48 years. So there's opportunities for us to take our concentrate to a third party in Namibia. And there's obviously, we believe that you need about 30 million pound resource to have a standalone yellow cake refinery. So now Copies has nearly double that. So we know that we've now got optionality as to how we develop Copies, but also what it means is that we could have projects at Hirabeb or Capri or Maranika and bring those concentrate into Copies if we choose to put a refinery on it. So we've got enormous variance in the development pathway that we can go down. Now we can talk about environmental till the cows come home, because the benefits we have of only leaching less than 5% of the ore instead of 100% of it. Hence your tailings dam's a lot smaller. You need a lot less acid. You pull calcite out, you can calcite out, so you can throw that calcite back in the leach tail, neutralize the acid. So there's a lot of benefits around what we do and the environmental aspects of it. So what we've demonstrated so far is we've taken the Maranika project from 93 ppm to 5,000 ppm. We've given that a life. The Angela project in Australia, we've reduced the acid consumption by 80% on that. So enormous amount of benefits we have on that. So if you can just go to the next slide. So talking about the Copies project and advancing that, we've just gone I've just been in Namibia in April, and we started excavating test pits to expose samples to then bring back to Australia for metallurgical test work. We believe that the best samples to be collected for any beneficiation process are from a representative mining method, like bulk sampling it as opposed to drilling it. So we brought that back. There's 6 tonne on the way back to Australia very shortly, being packed up in Namibia now. And what I really loved about seeing the first couple of pits being excavated is look at the yellow in this slide. The yellow is the carnotite mineral. It's a fantastic colour. I love the colour. But aside from that, you can see it. The fact that you can see it tells you that more than likely it's going to concentrate very well in our upgrade process. So as a metallurgist, I get excited. As a managing director, I even get more excited. So very, very excited about what this can do and where we can take Copies with, shallow mineralisation, low-cost mining, our upgrade process, which looks like it's going to work a treat. And we've tested just about every calcrete deposit in Namibia, and upgrade works on it. So we have a very high confidence level that the upgrade process is going to do a lot for us on the Copies project. So in the interest of time, I'm not going to go through our other projects in Namibia. Let's say there are a lot of them. You can just go to the next slide. Thanks, Jed. In Australia, we need to talk about Australia. We've got 28% of our resources in Australia. So here they are, mostly concentrated in the Northern Territory, as was pointed out by James before, that Western Australia is not necessarily that friendly towards uranium mining. So our focus has been on the Northern Territory. If you can go to the next slide, please, mate. So strong news flow coming out of us over the next 12 months in particular. We've got 5 drill rigs working, as I mentioned. So we've got here on our program that 2 to 3 of those are at Copies. And I put 2 to 3 because at the moment we've got 3, but we may pull that back as we move. At the moment we've also got a drill rig at Hirabeb doing a maiden resource definition program. Another one at Capri doing a maiden resource definition program. So we may move 1 or 2 of those rigs from Copies to Capri or Hirabeb. We've also got growth potential. We've got a large land package. We're not happy with 4 discoveries in 4 years. We want to make it 5 or 6. So we want to add to those. So what we see is that exploration companies like us, the value that investors see in us is number of pounds in the ground. So what we're doing is we're adding pounds. So maiden resource drilling programs at Hirabeb, Capri to add to our Copies project and our Maranika project. So add pounds. The next one is confidence level in your pounds. So we got a drill program in now doing an indicated drill program at Copies to increase the confidence level from inferred to indicated. So that's also happening. And the third one is investors talk to us about, we love the idea of upgrade, but prove it to us. So we're looking at, after this test work program in Perth, we're going to run a pilot plant in Namibia to demonstrate the upgrade process works. So a lot of news flow coming out, but the thing to bear in mind is here, these drill programs aren't short, because, Copies is 20 kilometres long. Here about Capri is 16 kilometres long. It takes a long time to drill those out. So, the news flow, even though it's in 12 months' time, is going to be a lot. In the interim, not so much. So we'll be looking at doing some sort of interim announcements along the way. Next slide, please, mate. So just in summary, we're a geographically diverse uranium exploration company. We're 152 million pound of assets in Namibia and Australia. We're poised for growth. We're growing now. You just heard me say we're doing 2 maiden resource drill programs on our second and third discoveries over a 4-year period. We're aggressively drilling. How many people can tell you they're drilling 125 holes a week? Although I think last week was 160 holes. They were just going so well. Our processes are very much refined now and are very much optimized. And that aggressive drill program has led to 4 discoveries in a period of 4 years. So, we've got a team now that are very competent with finding more uranium. We expect to find more. I'm sort of not happy with 4 discoveries in 4, and I really want more. And I think we can do that. And the upgrade process, well, it's an industry-leading process. It's very effective in adding value to us. And what better time to be in the uranium industry with the demand for nuclear and demand for uranium growing. So next slide, please, mate. So to finish up, that's what Namibia looks like where we are. We're not, and you haven't been there, David, but James has been there, and James is quite complimentary on the infrastructure in the country. We don't have too much problem with clearing of vegetation, accessing drill hole programs. It's a great jurisdiction to be in, but it is the desert. It holds its history, and we spend a lot of time on environmental cleanup and make sure that we rehabilitate every hole and restore it back to what it was when we got there. So thanks for listening, and I look forward to any questions.
Thanks, Murray. Great presentation. You've been in the uranium sector for some time. And I suppose one of the questions is, how hard was it to hold the line? Like, you could have been like others and divested everything out when Fukushima happened and there was issues in Japan and the price crashed. But how hard was it to stay the line and go, no, we're believers in the project, believers in the sector, believers in the economy, the commodity, sorry. And just so, we're going to tough it out.
Yeah, very hard, David. I can tell you, if I hadn't been the champion of the upgrade process, and as you say, I've been in this job for 12 years, I think I would have walked. $18 a pound, unloved. Try and talk to someone like James Bullen 10 years ago, he didn't want to know you. And, not just targeting James, but, brokers didn't want to know us 5-8 years ago. It was very, very tough. And when you're being paid by shares, I can tell you Coles and Bunnings don't take Elevate shares. So it was very difficult, but we were firm believers that uranium had to recover for a number of reasons. And the extra energy requirement around the world, as, the demand, just in what we saw, not even thinking about AI or data centers, and third world countries coming out of, you walk around Namibia, there's people on mobile phones that don't even have a house. So, you knew there was a demand there for energy. So we're a believer in it. And we also understand that, carbon was becoming important to people and nuclear is carbon free. So it was difficult, but it's nice to have happy shareholders now. We've made a few bucks out of us. And it's nice to be in an environment where people are talking nuclear, even though in Australia we think we know better, and the rest of the world who are focusing on nuclear, we're not. But one day maybe we'll catch up. But yeah, it was hard, but it's been rewarding.
And Namibia itself, a very well-known uranium nuclear jurisdiction. A lot of money and investment over a long period of time has gone in there. As you say, there's Rio with Rossing, and there's a number of other projects there. How interested are the bigger players in Namibia in what you're doing, given what you've been able to achieve from an exploration point of view?
Yeah, I suppose the two that James talked about, 60% of production comes from Cameco and Kazatomprom. They're both focused on their respective countries of Canada and Kazakhstan, respectively. They haven't moved into the country. Orano, big French company, are there. So there hasn't been the interest from the large companies that you might expect, but I think as using us as an example, if we increase the pounds we've got in the ground, we increase our confidence level in those pounds, and we demonstrate our process works effectively, I think there's going to be a lot of interest in us in particular. If we're looking at 200 million pounds in the portfolio across our both jurisdictions, and we've got upgrade demonstrating lowers the cost by 50%. I think there's going to be a lot of interest in us, and the interest in Namibia, the infrastructure that James saw when he was there, I mean, it's all there. I mean, you've got international ports and airports and great roads. There's a power line. In fact, if you look at this slide, you can see vertical poles. That's the bottom of the Copies project. It's a power line running through it. So all the infrastructure's there. So I think and the history is there. So you're not going into Niger or, North Africa, somewhere where there's risk. There's much more risk. This is a known uranium jurisdiction and has been operating continuously for 48 years. I don't think you get much better than that.
Thanks, Murray. On that note, we will bring you back a little bit later because your knowledge, similar to the previous presenters, is immense when it comes to this topic from a thematic point of view and what investors really should be thinking about from a thematic point of view moving forward. So thanks for the presentation. We will welcome you back shortly.
Thanks.
Now I'd like to introduce Greg Shirtliff, Geology Manager at Toro Energy, ASX code TOE. Toro is a uranium development and exploration company with projects in Western Australia. Toro's tenure in Western Australia is also prospective for gold and base metals. Greg, welcome, and over to you.
Thanks, David. I'll start with two apologies. Apologise that the Executive Chair, Richard, couldn't make it today. He did have a sudden funeral to attend to. So apologise for that. And apology number two is I'm not the Executive Chair. I'm the technical guy. So, just apologise, forward if I start going off on tangents on geology. But I'll try not to, because Richard, it looks like, has given me a presentation where he has purposely made sure that there's not too much geology in it. It's a fairly big presentation that you've probably got in front of you. I'm just going to concentrate for these few minutes that we've got on pages 3 and 4 and a little bit on page 5. Please, just ask questions because this will be relatively brief. I'm sure we've got plenty of questions. So just a little bit about Toro. The general thing about Toro is we've got about 91 million pounds of U3O8 at a 200 ppm cutoff. That's all through Western Australia. That includes an ISR discovery in northeast of Western Australia, near Lake Mackay. It also includes two substantial deposits very close to our main game, a deposit called Nathana and a deposit called Dawson-Hinkler, which are very close to the main project that we're trying to get up and running. And with the uranium price as it is and rising, then these will probably come in. So with our main project, what I want to talk to you about today, and then we're going to talk about the scoping study, which actually just takes a part of that project and looks at the economics of just a part of that project. So our main project is the Wiluna project. It's located basically at Wiluna, two deposits 30 kilometres south of Wiluna and one deposit about 80 kilometres away, 90 kilometres away, directly 50 kilometres east of Mount Keith and about 15 kilometres northeast of the Bronzewing gold mine. We are right on the Goldfields Highway, just at the north end of the Goldfields Highway. The Wiluna gold mine has been operating there for well over 100 years. So we've got lots of infrastructure. It's, it's WA, it's a mining state, one of the best mining jurisdictions in the world. Not quite at this moment in time for uranium, but we believe it will be. As I said before, so in those projects, those three deposits, there's 62.7 million pounds of U3O8 at a 200 ppm cutoff, and that could be increased by about 10 million pounds just to the west, but we've recently updated that to 20 million pounds at a 100 ppm cutoff. That's called Dawson-Hinkler. That's about 15 kilometres to the west of the two main deposits, Centipede, Millipede and Lake Way, and we're starting to look at that as potentially bringing that into the project. And Nathana, which is about 200 kilometres to the northwest, we've got another 12 million pounds there at 200 ppm, and we'll be looking at seeing what that looks like at 100 ppm as well. So yeah, strong infrastructure here in WA. We have access to all of the water we need, all the power we need, all the services we need, and obviously main transport routes pretty much across the country from where we are. We do believe there's still strong resource potential in our own deposits that we've got, mainly through economics. So at the moment, all of our resource is officially documented at a 200 ppm cutoff, but with the economics improving, we will be going to a 100 ppm cutoff for all of our resources, and that will, increase we're not increasing the resource, but to the people looking on from outside the project, it'll look like we're increasing the resources, because those will then potentially go through any mine that we developed. Another relatively important thing that we need to talk about with us is that we already have a potential JV partner in one of those deposits. So the Lake Maitland deposit, which has about 26 million pounds at a 200 ppm cutoff in there, we have a potential to enter into a 35% JV partner with a Japanese uranium and development amalgamation of companies. Included in that is Itochu, who already have interest in actual nuclear facilities in Japan. So we meet with them every year, and of course, with things going as they are, and the Japanese now looking to turn back on more reactors and having nuclear as a major part of their decarbonisation, they are obviously much more in communication with us nowadays. So that's something that you have to remember. We potentially have a JV partner. They will probably, be looking to want our uranium anyway. We've also updated our scoping study just recently. We had a scoping study in 2022, I think it was, where we looked at grabbing the Lake Maitland project on its own because of its geological features and putting a processing facility just there and just operating a mine just on that deposit. And we've recently updated the economics of that scoping study, and we'll go through that in the next page. We also, I guess the last thing to talk about here is we also are looking into, at the moment, demerging all of our other non-uranium exploration assets. At Lake Maitland, we're very lucky, and also one of our mining leases at Lake Way, our Lake Way mining lease. Our Lake Way mining lease sits directly opposite the Wiluna gold mine. And so that's obviously prospective for gold. It has never really been drilled for gold because it's been held by uranium companies who found the deposit there in 1972-73. I think it was Esso that discovered the deposit. They discovered most of the deposits around here. And also at Lake Maitland, we have a very large package of ground at the Lake Maitland deposit. That has a very large paleochannel across it. There's not a single rock outcropping, so it's never really been explored before, and also has been held by uranium companies around since 1972-73. So that has also not had any gold or anything explored for previously, despite the fact that it's in the Yandal Gold District. It's 15 kilometres from a multi-million ounce gold deposit, Bronze Wing. Darlot's just down the road, and Jindi's just north. So we believe there's lots of potential for gold. We have actually started drilling there for gold and getting lots and lots of sniffs. And of course, if you've been looking at us, although it's not the flavour of the month at the moment, we have discovered 4 small, we've made 4 nickel sulfide discoveries, which we believe are probably the first nickel sulfide deposit discoveries in the Yandal Greenstone Belt. However, we're looking into separating those assets out of the uranium so that we can focus on the uranium and also have somebody else focus on those for exploration and get money for those separately. So that's basically with it for that page. We go to the next page, page 4. we now come to focusing in on the Lake Maitland project. As you probably already know, we already have environmental approvals both with Western Australian and federal government. We've gone through that environmental approval process and got EPA approval in WA and the national. And so we have already gone through all that process with the main project, which is all those 3 deposits. We've also got a mining agreement with the TOs for the Lakeway and Centipede Millipede deposits. So we're very progressed in terms of where we're up to in mining, etc., apart from the government. And however, we have been doing a lot of research while Murray Hill was talking about the downturn in uranium. During that downturn in uranium, we decided to go back to the drawing board and do a lot of research on processing techniques and also on our geology, and which included doing this gold exploration and nickel exploration. But we found that the Lake Maitland deposit was very different to our Centipede, Millipede and Lakeway deposits, and we thought that we could take advantage of that. And so that's why we've decided to just have a look at what, with the new processing technique that we think we can develop, we'll just have a look at what that might look like in terms of the economics if we just did that project on its own. So just the Lake Maitland deposit, 26.4 million pounds at a 200 ppm cutoff. And we've got some pretty good results. So our recent update, we have, everything's remained the same in terms of from our previous update. We've got an exchange rate of 70 cents, where we've got a uranium price of $85 a pound. I think it's $84 something today. And also, we're going to have a byproduct of vanadium in our processing technique as well. The reason why we're doing vanadium is that simply at the end of our processing, we end up with vanadium in the stream. We were going to have to separate the vanadium out to get to the uranium anyway, so we might as well actually make sure we separate all that vanadium out and actually have it as a byproduct. We're going off I think it's $5.47 a pound for vanadium for all of our economics. The Lake Maitland deposit, we're looking at roughly 2 million tonnes per annum throughput. It gives us a 17.5 year mine life, and crucially, it also gives us this isolates our potential JV with our JV partners. So that is the project that our Japanese JV partners who want the uranium can potentially come in on. So that's another reason why we looked at the Lake Maitland project on its own. So as you can see, it's all out in front of you. Our NPV is very good, 832.8 million. We've got a 2.1 year payback, internal rate of return at 48%. These are all really, really good figures for this small little project in terms of the world's scale of uranium projects. I used to work for Cameco, so this is, compared to Cameco, it's a smaller project, but it's really, really good economics from what we think we can do with this project. That's pretty much all I really want to talk about at the moment. Yeah, any questions?
Thanks, Greg. Clearly a compelling project. Clearly, there's sort of the elephant in the room, if you like, of the WA government's position on uranium mining. And I'm not going to ask you to delve into areas that are probably more of Richard's sort of area. But I suppose the question I do have, and the question that's come through, which I think is important from a technical point of view, again, is it important to make sure that the project is ready if and when that opportunity opens to be able to develop it, that it's not a case of, look, we just let it sit for 5 years waiting to see what political and community position may be, that it's actually seemingly that the position Toro's taken is we want this project to be ready. We want to make sure that the economics and the technical stack and that the joint venture partners and the right partners are in place, that should that opportunity and that window open, that we're ready to go.
That's right. Look, at today's prices, we haven't done the economics on the old project, but at today's prices, the old project, we've already gone to that step. There's been a pilot plant. We've produced uranium. So the old project with 63 million pounds of uranium, we know that works. Okay, we haven't tested on the current economics, but it's probably likely, and particularly with the idea that the price is going to go up anyway. So what we did when the uranium price was low, disregarding what the West Australian government was doing, was we wanted to try and improve what we had. Yeah. So we went back and we have gone back and done detailed geology on all of the deposits. We've gone back into the research and trying to tweak things and change things in the processing. And earlier this year, we have sat down and discussed, okay, it looks like we've got something at Lake Maitland on its own. The WA government's not changing its policy right at this moment in time. What are we going to do going forward? And the decision has been clearly made between all of us that we think sentiment is changing. We think that the sentiment about mining uranium probably already has changed. We don't. An important thing we think as a miner, rather than someone that's looking at nuclear, is that we're just mining uranium. Whether or not Australia decides to go and do nuclear energy is kind of not really worrying us much. Our demand is coming from overseas, as everyone's been talking about, and particularly because we've got this relationship with our Japanese partners who are telling us, we know that there are countries that the only way they're going to decarbonise is through nuclear as a major part of their energy source. They don't have the space to have acres and acres of solar and wind. So countries like Japan, if they wish to have zero carbon by 2050, are going to probably have to go down that line. And that's what we're hearing. So we're not too worried about that. We do think that the pressure will eventually come on the government of WA, that they will either change their policy or there will be a change of government. In the meantime, we're going to assume that that's going to occur. And like you said, we're going to make sure we have a project ready to go. We have re-engaged with their traditional owners. We have decided to go the next step with our research and do a pilot plant, hopefully by the end of this year. POWs are all through for a major sonic drilling program to gather enough material for that. And just to emphasize again, what I've talked about today is only one of the deposits of 3 deposits. And there's another deposit of 20 million pounds at 100 ppm, 15 k's to the west, and another deposit 200 kilometres away, another 12 million pounds. So I'm only talking about one of those deposits today. So there's more research to do to see if we can take what we think we can do at Lake Maitland and do that also at Centipede, Millipede and Lake Way. There are economic questions to answer about that. Once we realise we can or can't do that, if we realise we can do it, then we need to work out whether we keep a processing plant at Lake Maitland, truck stuff to Lake Maitland. Do we put another processing plant at Centipede, Millipede to save on transport costs, etc. That sort of stuff will come into it. So that's what we're going to. That's what we're doing. So we're going very much forward, and making sure that we start the TO process, the environmental process again. That's all getting back online, and we're moving towards. And ultimately, if it doesn't happen, if there's no change in government in the next election, then, by the election further away, 2028, 2029, we're going to have a very good project and very much ready to go.
As you say, developing a world-class project, clear focus on the development of the projects and the other satellite, if you like, deposits and projects that are in the portfolio, clear focus, shareholders supporting the company, recently raised a significant amount of money, so there is a lot of interest in Toro and its plans. So, Greg, thanks for your time, and we look forward to following with interest.
No worries.
Now I'd like to welcome Andrew Grove, Managing Director and CEO of Aura Energy, ASX code AEE. Aura is an absolutely cracking company that's primary focus is the near-term production from its Tyrus uranium project in Mauritania, which boasts significant opportunities for both resource and production profile expansion. Towards the end of the curve, if you like, moving clearly into that development phase. Andrew, we look forward to your presentation and following with interest. Over to you.
Okay, thanks, David. There's a bit to get through, so I'll skip over some of the technical details, but just as some of the other presenters have said, we're in northeast Mauritania. That image in the background is one of our exploration sites. So we clearly don't have any material, environmental or social concerns out where we are. We do have some logistics issues, but they're overcome by a very high quality project. So if we can move to slide 3, please. Yep. Just a quick snapshot. We do have 2 projects, and I'll really focus on the Tyrus uranium project in Mauritania, but we also have a very large polymetallic project in Sweden, which also contains a lot of uranium, but it's much further. It's more greenfields in terms of the development scenario. We raised some money as well, so we're well capitalised to get us in through to our final investment decision that we're hoping to achieve in Q1 next year. So next slide, please. So look, the 2 projects that focus on Mauritania. It's a Cow Creek hosted uranium deposits. It's very shallow. Most of the mineralization's within 5 meters of surface. Uniquely, it's all free dig. It has a very strong beneficiation component to it, which, as Murray said, is very good and reduces your costs. So our beneficiation is very simple. We essentially dig it up, put it through a trommel, and over a set of wet screens, take the -75 micron fraction. So we're ending up with about 13% of the mass and 91% of the uranium, and that'll go to an alkaline leach project, very similar to Langer Heinrich. We're on a FEED study, front-end engineering design study, NPVs of $388 million using $80 a pound uranium price, 36% IRR, rapid payback. So it's a strong project. It's getting better. We just recently completed a drill program, and we've increased the resource by 55%. The FEED study was based on the old resource, and we're currently updating that. So we now can have a contained mineral resource at Tyrus of 91 million pounds. So the project, while it currently stands as 2 million pounds per annum over 17 years, will get bigger and gives us a lot of optionality and maybe increasing the scale and the output of the project in the near future. And I will touch on Hagorn here and then skip over at the back of this presentation, but it's basically a very, very large 2.5 billion ton polymetallic shale project in central. It makes up of vanadium, sulfate of potash, uranium, and a couple of base metal minerals. We did a scoping study last year, which excludes uranium because there's a current uranium mining ban in Sweden. Strong economics depending on the vanadium price, essentially. But if we add back in uranium, it uplifts those economics quite significantly, and it does contain circa 800 million pounds of uranium in this resource. It's a very expansive shale system. So, it's one that in our back pocket we're not getting a lot of value for it, but it potentially has a very significant amount of value. And what we're doing this year is potentially is putting an application in for an exploitation permit, which is equivalent to a retention license. So over that asset, so we maintain control of that asset. So next slide, please. So Mauritania, just north of Peter's project in Senegal, Mauritania is it's a stable democracy. We just had a presidential election end of last month. The incumbent President Ghazouani was returned for his second term, 5-year term, with a very impressive 56% of the primary vote. Big country, 1 million square kilometres, very underpopulated, just under 5 million people. But it does have a mining history. They've been mining there for 20 years. Kinross with the AWST Gold Project, First Quantum, SNIMS, the state-owned iron ore company that produces circa 18 million tonnes a year out of their various projects. BP are investing significantly in an offshore gas field in combination with Senegal to the south. So they're very strong on mining. Not a lot of mines, but they're very strong on mining, very supportive. This week we just got our last license to allow us to develop and produce uranium from Tiris, the prior exploitation permit for developing a uranium mine. So we're now fully licensed to commence operations up there. They've set up an interministerial committee to help us, like a special projects committee to help us on our development pathway. They have while they don't have any uranium mining, they've got a well-established mining legislation through the Department of the ARSN, and they've been member states for the International Atomic Agency since 2004. So they're open to uranium mining. They've got the legislation in train, and they're very supportive for us to go forward into uranium mining in Mauritania and develop what will be a long-term uranium province, particularly in the northern part of the country. Next slide, please. Okay, high-level economics. We've sort of talked about some of the economics before. The economics were based on the previous resource, which was circa 60 million pounds. Our recent drill program increased that by 55% to 91 million pounds. So we are updating the mining optimizations, the economics, and looking at the optionality to increase that throughput sometime in the future. So it should be some good numbers coming out around that sometime in the next few months. All-in cost $34.50 a pound. That's just uranium only, and it really is driven by that shallow nature of the mineralization and the beneficiation. So we essentially upgrade the in situ grade, which is about 255 ppm, to 1750 to 2000 ppm. So it's a 6 to 8 times upgrade by just a simple size fraction differentiation using screening and scrubbing. So we've done 150 tests and pilot test work program to demonstrate that, and we've got continue to do test work to demonstrate that. And it's really driven by, it's a calcrete hosted uranium deposit, but it's quite unique in terms of it's quite young, and it got frozen in time when the desertification of the Sahara Desert happened. So our calcretes crystals are sub 10 micron. They loosely bound to the weathered granite particles that host the deposit, and they haven't had the longer time history for the calcrete to fully develop, or the carbonate, the carnatites to crystals to get bigger. So it's quite unique in that respect. As we've said, we're working towards FID late this year or early Q1 next year, and then post that it's 18 months design and construct, and we'd expect to be producing uranium at Tiris in 2026-27. But we think it's a uranium province. There's very little exploration. We've been targeting the radiometric anomalies. We've significantly shown that resources can grow, and they continue to grow. And what we've done is positioned ourselves to have a significant footprint over a new emerging uranium province. And we've got 13,000 square kilometres of tenure under application. They haven't been granted yet, but that covers that northern Mauritanian belt that have a lot of radiometric anomalies that haven't been drilled, and some structural targets as well. So if we can go to the next slide, please. Again, we'll just look. We won't go into the detail too much, other than the project's about $230 million to build, plus some working capital. We started the funding process on that. Again, funding process is going well, but it is Africa and it is Mauritania, so the pool of investors, particularly structured finance investors, is smaller. The image there is our 3D design of our alkaline leach plant. The leach, because of the beneficiation, the leach plant's only 500,000 tonnes per annum, producing 2 million pounds a year on uranium, but particularly the back end is scaled for 3 million pounds a year because it's a off-the-shelf AWST plant. So heated leaching, ion exchange, and the biggest portion of this plant is the filter presses because of the fine nature of the mineralization or the product that's going to the plant. We have to use filters rather than CCDs or anything else to separate the liquid and solids. Next slide, please. We won't spend a lot of time on this, but this showing you the production profile of the feed study. Again, our strip ratio is very low at 0.7. It's all free dig, and because of the shallow nature of the mineralization, you've got ultimate flexibility in the mining. We'll have a number of mining units feeding ore to the plant in a slurry, and the mining units will simply be a small fleet with a scrubber, a set of derrick screens, taking the mass down to circa 13% of the mass, 91% of the uranium, and that'll get slurried to the process plant. We can do that portion of the upgrade and mining for $8 a pound. So that really what drives our low costs. Next slide, please. There's more stylized view of the process route. So we've talked about scrubbing, screening, mining, slurry to the process plant. Essentially, it's a leaching alkaline leach, and it's very similar to Langer-Heinrich's flow sheet. Filtration, ion exchange, and then it goes into an AWST plant, which is a Adelaide control system off the shelf yellow cake precipitation packing unit, and then we'll take the yellow cake via road down to the port in Nouakchott and ship it up to refiners or converters and refiners. And we've got an agreement with Orano for the seaborne logistics, and the ground transportation will be under international standards. Next slide, please. So let's look at the resource. The blue areas were our previous resource. The red areas are the circa 15,500 meters we did recently. Again, because of the shallow nature of the mineralization, they're shallow air core holes. Most of them are sort of, we drilled a refusal, so most of them are sort of 6 to 7 meters deep. And then use radiometrics to determine the in situ grades. 55% increase from the previous drill program, but you can see the underlying images of the radiometrics. There's still a lot of active radiometric signals that haven't been drilled. We've only really focused our drilling on our 2 licensed exploitation permits and our exploration license, Hippolyte South. But as we've said, we've got 13,000 square kilometres of new tenure, and you can see on the top left-hand side of that slide, there's some fairly significant radiometric anomalies that underlie some of our applications, which are more than likely to generate more resource growth in the future. So while we're sitting at 91 million pounds, we think this is a proper uranium province, underexplored, and we could easily see multiple new discoveries in this area. And to a couple hundred kilometres to the west is Tourist West that contains, I think, about 12 or 13 million pounds of uranium, and again, underexplored. So look, we think we're sitting on an emerging uranium province. We've got enough to start a very successful mining operation, and we've got the support of the government to do so. And that's what we'll be focusing on the next couple of years. But optionality in terms of finding new uranium, I think we're very well positioned. And we've delivered this uranium at 20 cents a pound, but that includes all our study costs to date. So everything we've spent in the country on the project only cost us 20 cents a pound to get us to this point, which is funding ready and development ready. Next slide, please. So what's news flow? And again, the image there, you can see the nice yellow carnotite. It's very visual, which will help in the mining. So we've received all our licenses. We're growing our team. We've got new CFO. We've appointed an owners team. The market's pretty tight for project development managers, so we've identified a small boutique group, Project EQ, run by Jan. He comes with a team of 5 engineers. They specialise in owners team activity, so they've hit the ground running. They're getting us ready for pre-final investment decisions, so all the contracting strategy, all the engagement with the subcontractors, and then they'll take us through to development. So we're ready to develop the project. New CFO with lots of West African experience. I've got a country manager. We'll start in November, and we're waiting to make an announcement around him once he's completed his current position. But he's a very high quality Mauritanian individual, and will go a long way to support our efforts in the country, increase the resources, as I said. But in terms of recent future news flow, we're updating the mining schedule and economics on the bigger resource. So we would see that 17 years at 2 million pounds significantly increasing. We're looking at options for expanding the production in the future, maybe not up front, but maybe after a couple of years after we've got cash flow to support some additional capital. But the plant's scalable, the resources is very open and very flexible given it's shallow. So we fully expect to see some very strong and real options for going well beyond the 2 million pounds per annum production rate. We're well advanced in terms of offtakes, and some of the offtake strategy will be driven by the funding requirements. But we have an existing offtake with a trading company, Curzon. We recently came to a renegotiation on that, and that's circa 150,000 pounds a year over 7 years at $74 a pound, and with another 150,000 pounds at spot minus 4%. We're very close to signing up a committed offtake with one of the major US utilities as well. So we've got a expert uranium trading guy who's used to work for Rio Tinto doing their uranium marketing. We've had a long engagement. It does take a long time to engage with these utilities, and we're in the position where we're getting more real. We're nearly FID. But we are a greenfields project in a greenfields country, so you've got to get over that hurdle with the utilities. But we're getting very close and being asked to tender on a new number of contracts they're putting out in the market. Our debt funding process has commenced. We've engaged Aramco, their specialist debt advisory group, in Africa. We've done a number of projects in Africa, including West African Resources Sanbrado project in Burkina Faso, and they're doing some other uranium stuff, so they've got expertise. We're also looking at strategic investment process with Macquarie Bank, and obviously the equity. So we've got to pull together all the funding options. And as James said, funding uranium projects is a challenge, but it can be done. I think we're, on the back of a good project. I think we will be able to deliver that. So what we're doing is pulling it all together later in the year, so we then know what the best optimal funding mix is for our shareholders. Where we are in the desert, waters are important. Not a problem, it's important. We have a small water resource around the project, but it's a confined aquifer with limited recharge. 100 kilometres to the south, there's a massive basin, to Adeni Basin, that we're starting to drill on a number of targets we've got down there. But that basin delivers significant water to the iron ore mines, and it's sort of in the area, a couple 100 k's away. But we're confident that we'll deliver the water from that source. ESG is important. It's particularly important in a developing country, and particularly important when you're dealing with radiation. So we're updating our ESG framework and procedures and policies. And while we had an exploitation permit approved about 4 years ago, so we're updating environmental management plans and social engagement plans and radiation safety plans. So we intend to deliver this project with first world standards and for the long term, and other pre-FID work. So really it's all driven towards getting to our final investment decision later this year, early next year, and then getting the project into production. Next slide, please. Sorry, we've got the next slide, or we're frozen. Oh, so look, I won't dwell on this too much, but Häggån is a massive resource. Sweden are in the process of lifting the uranium mining ban. They called an inquiry to investigate the process to lift the ban. The current coalition government is very supportive and wants to facilitate the mining industry more than the governments have in the past. So we expect that the legislation to lift the uranium mining ban to be introduced for discussion in Parliament by the end of the summer. That's what the politicians are telling us, and they'll take that to a vote early next year and January next year. So we expect that uranium mining ban to be lifted in country. They're also looking at other ways to improve the approvals process in Sweden for mining. But if we include uranium into the project, then it certainly uplifts the NPV by circa 37% using $65 a pound. So it will deliver a much more robust project if we can access all the commodities in the mineral suite in that shale. But it's a project should have significant value sometime in the future as we secure the licensing, as Sweden lifts the uranium mining ban, and we progress through the studies and understanding of that project. Maybe 2 slides forward, please. Next one. So essentially, in summary, we like the uranium thematics. We everything James said, we 100% agree. There's supply constraints. There's good support for the uranium price, and we think we're well leveraged to deliver into that. The main focus and the main near-term activities are building a uranium mine in Mauritania with Toro, strong economics, good growth through resources, and improved scale of the project. We're fully licensed, and we're very, very close to starting the development of that project. And if you put you add Häggån onto the mix, we have a very, very large uranium mineral resource inventory of 891 million pounds. I think as we see continued support for nuclear power industry and the uranium price, then we're well positioned to leverage off that, both through production and through future production from Häggån. So I think that's the conclusion. I think the last slide is our sorry, the next slide. I had one more slide, sorry, after that. And that's just a view of our tenement applications through northern Mauritania. You can see the green tenements are our existing tenements. So we've got about 30 times the tenure under application that we've already got. And we've already got 91 million pounds with some pretty strong growth within those existing tenements. But a lot of those tenements targeting actual radiometric anomalies, plus some structural targets to the south on that unconformity contact that hasn't had any uranium exploration, and in fact that's where the water drilling will be. So that's my presentation. Thank you. I'll take questions.
Perfect. Thanks, Andrew. Great presentation. Clearly all in uranium, and similar to, I suppose, Murray and others have really had to hold the line, if you like, during a tough uranium market. How hard was that?
Wasn't that hard for me because I joined in January. But look, the company, the company has been focused on mainly on uranium through most of that time, and it's been pretty tough. They've got recapitalized a couple of times. We were recapitalized about 2.5 years ago, because the market wasn't supportive of uranium at $15 to $30 a pound, and nobody did any work, and the investors weren't giving you money for that. But the company really had a lot of perseverance and saw the value of these two assets that they had, and they did manage to get through. But I think it hurt shareholders through the way. The last recapitalisation, shareholders are well in the money. But yeah, look, it's been a tough journey for them.
As you say, good point here. You came in January. What attracted you to the company?
Look, I just finished up a gold project in Mauritania, in Senegal, where Peter is, and I really liked. I'm a geologist, like technical, worked for Macquarie Bank for a long time doing mining finance, so I really like the projects. Assets are the hard things to find. You can deal with jurisdictions and things, but you've got to find the projects. And this project stood out to me as a real low cost project with lots of flexibility, and spent a lot of time on a DD on the beneficiation particularly, and they've done a significant amount of test work to prove that it's valid and repeatable and consistent, and the exploration potential is significant. So I really like the idea that we can develop a proper uranium project and then have the optionality to make it bigger and actually find more and more discoveries. So, a lot of it should position itself, once we've proven that it's a good jurisdiction to do business and you can produce uranium from it, that we've got likelihood we can deliver 2 or 3 more discoveries similar to this.
You mentioned in your presentation the fact you're nearing final investment decision, financing, all of those sort of things. Have you noticed the change in the off-takers, the financiers in recent times? Obviously, you came in January, but you've got a strong history in project finance. Have you really noticed the difference in tone, or has that group were already in that mode of needing and wanting to support projects like this, and it was really that the market was catching up, or has there been a sentiment change at that end as well?
Well, look, I think when you go to Africa, in terms of debt funding, particularly, there's only a small pool of banks that play with that level of country risk. It doesn't matter which country you are in West Africa. But what I've noticed is a lot of those financiers who are comfortable with Africa as a jurisdiction, that they're more comfortable with uranium. Some of them are changing their existing bans on funding uranium. But it's helped by the price. It's a strong project, strong economics because of the price, and we can now give some certainty on price to the financiers with a number of off-takes which have collars or floors or fixed pricing from tier 1 counterparties, being the utilities. That gives the banks a lot of comfort in terms of revenue certainty, which they worry about a lot in terms of pricing and getting their money back in the early part of the project.
A great project, clearly some big milestones ahead. A greenfields uranium jurisdiction, but a well-known mining and exploration jurisdiction for commodities outside of uranium. So we look forward to following the country with interest. Andrew, thanks for your time. What we will do now is open up a bit more of a panel. So I will invite back each of the panelists or each of the presenters to join a panel, and we'll have a conversation for 10 or 15 minutes around the thematic of uranium and nuclear. And I'm just waiting while James comes on. So this is obviously for the audience, your chance to ask any questions more broadly of the thematic that is the uranium market and the nuclear sector. I might throw to you, James. I think you're just logging in now. M&A clearly probably hasn't happened significantly in the sector for some time. None of the big players are out buying projects or developing projects. They're sort of probably sitting on the sidelines watching what's going on. Do you think that's going to be a more prevalent thematic of the uranium sector over the next 6, 12, 18 months?
I think it will be sustained, but clearly there has been some M&A. Paladin launching its merger with Fission and getting the board over the line there. That was a huge piece of news. Boss acquiring a piece of Alta Mesa in the US off Encore, and then obviously Deep Yellow did take over Vimy a little time ago. But I think that will continue to happen. There will continue to be a rationalisation. I think scale matters, to be honest. As we've talked about quite a lot, funding for these projects is relatively challenging sometimes. The equity market has done a lot of heavy lifting and has been there and highly supportive. The banks are starting to turn up, but they've been a little bit more recalcitrant. But I think that will change. But regardless, I think that funding these projects is relatively challenging. Scale matters. Scale matters for investors, and it enables you to recycle cash flow into growth. So I think it will continue to happen. Yes.
I might throw a similar question through to Murray, and then Andrew, I'll throw it to you. Having sort of stayed focused and really committed to your projects over a long period of time, did you have to fend off a few cheeky offers along the way?
No, we didn't. Actually, we did some M&A too that James didn't allude to. We picked up our Australian assets in December of 2019 at an equivalent of 4 cents per pound on the ground. So that's pretty cheap. No, I suppose one of the issues we've had is that we have had a process that we developed in-house that we need to prove to investors that it's and potential M&A companies that it's worth picking up. So hence we're moving down the pilot plant path. And it's only just recently we've picked up, announced the Copies resource to 58 million pound. Previous to that, we just had the Maranika project in Namibia. So we really weren't that attractive, but we're becoming far more attractive now. And as we move forward with the work we're currently doing, I think we'll be even more attractive. Just like a lady down the beach with bikinis on, mate. Very attractive.
Andrew, you're moving into final investment decision, so it's a well-advanced project. Similarly, does that start piquing the interest of potential suitors for the project, either at a project level or at a company level?
Look, yeah, we are running a project level inquiry at the moment with Macquarie Bank to look at potentially finding a partner to help. To take a position at the asset level. We're getting a number of levels of interest, and who knows where that sort of leads in the end. But there's a number of parties that are, either producing uranium or want access to product that are more and more interested. Obviously not everyone's comfortable with Africa, but there is a more level there of interest. I think people are I think for us particularly, are looking at, can the jurisdiction deliver the uranium? Can you deliver uranium from where you are in Mauritania? But we're doing the work to prove that.
And Peter, much early stage from an exploration point of view, but again, that it's where the opportunity lives, where all of a sudden, even though you're at an early stage, do people start watching with a lot more interest what you're up to?
I think the comments on the scale and the scalability of the project is very relevant there. I don't think that we're getting any interest from anyone. We don't look at it that way. We just process our project as we go. But I do think that we're at the bottom end with only 16 million pound identified to date, and I think that we would have to significantly improve that before we draw the attention of anyone, particularly being next door to a 91 million pound project in Mauritania, which also speaks French.
Thanks, Pete.
And James, for the investors and you're part of one of the biggest wealth management groups, certainly here in Australia, if not globally. But for investors who toe the line, we talk about the companies themselves having to stay focused, and management, staying committed and persevering and all those things. But, for the investors who either put the stock in the bottom drawer and said, look, I think the project, the management's good, but I'm not sure what's going to happen, or continue to support these companies through continued raisings over time or recapitalisation, the reward for them now is great. And how much should they be sort of patting themselves on the back and saying, well, this is a great result, and we all hoped this moment would come?
Yeah, thanks. I'm still recovering from Murray describing me as a fair weather friend. And look, the investment community can be a little bit like that as well. There's clearly been a few easy dollars which have been made, and there's been a number of funds that were in there nice and early. But to be honest, they haven't been exiting. Yes, they've been moving around in their positions. And so moving out of some of the companies where they think that the value case is eroded somewhat, but then they're coming into these smaller developers, because we have seen quite a large gap between the haves and the have-nots. So at the top tier, you've seen, in terms of resource multiples, when you go through and you have a look at Paladin, Boss, the next gens, etc., they're a number of times greater than what you see in the smaller cap developers. And so we have seen some rotation between them, but they're definitely staying warm on the thematic. And I think we're going to see more and more generalists come in, because it is going to be something that plays out over time. I think I mentioned in my presentation, there's 3 or 4 key mega trends which are going to continue to run through and support this uranium price.
And I suppose, Greg, asking you for more a technical question, or even coming out of your roles previously, some of the mega trends that James refers to, were they even in the company's thinking 5 years ago? Do we think that data centers and things like that were going to play a key role in the development of the uranium and nuclear industry?
Well, 5 years ago, I wasn't involved in much of the management decisions. I've kind of doing that now, the last 3 or 4 years. So 5 years ago, I wasn't really on the board making those decisions. However, personally, I'm one of those rare geologists that that agree with climate change scientists way back in the 1990s. So I actually made a decision to move to uranium based on that. So I actually started my PhD in the late 90s based on that decision. I thought that energy, I thought that there is no way in the world normal people are going to stop needing more energy. In the early 2000s, mobile phones started coming in, and then a little bit later they started getting apps, and we started to realize that those apps were hooked up to data servers across the world. They require huge amounts of power. Everyone started to talk about electric cars. I mean, we're producing something like 100 million vehicles per annum around the world, and if they're all going to be plugged into the power points, then that's a lot of power. I'm just one of these people that, the solution to the climate issue is not going backwards, it's going forwards. And I've always believed that nuclear energy is one of the obvious no-brainer solutions to getting towards a lower carbon future. I don't think, I'm speaking from a very personal point of view here. I don't think we're going to stop producing carbon so quickly, and uranium's the no-brainer solution to that. And I think a lot of countries around the world are starting to realize that acres and acres and acres and acres of solar cells backed up by batteries is not going to get you there. So I guess on a personal level, I would say yes, I did. I actually went into this industry. I've been in uranium since the late 90s, working for ERA up at Ranger Mine, and then Rio Tinto took over, so with Rio, then with Canaccord, and now with Toro. So yeah, I'm one of those guys.
And just following on from that, Peter, you've been in the uranium industry a long time, and you and I have spoken, go back 15 years or more. And again, you've had to, and each of you have all had to sort of hold the line, if you like, and stay committed to uranium and the thematic. Peter, for you, what's kept you focused and holding the line, if you like, in terms of staying committed to the development of uranium projects?
Yeah, it's 18 years, Dave, by the way. You're older than you think. Yeah, it's the thing that keeps me in uranium is simply it is the answer. If you, the world is starting to realise, and like Greg said, he's known since the 90s that if you want stable power, you want to grow, the real only answer is nuclear power, and if that requires uranium. So it's a matter of staying until the rest of the world realises what is so obviously facing everyone as we go into the future.
Now, I know I am preaching to the converted a little bit here, but Murray, similar question. Again, you've been through a number of iterations, Elevate, and then previously to that, have stayed in Namibia, focused on uranium, and you and I have had lots of conversations over a long period of time about this and how the perseverance was required, and everyone could now say everyone here is an expert and how well everyone's done, but it's taken a whole lot of blood, sweat, and tears to get there. Again, holding the line, was it hard, or did you always think, sooner or later everyone's going to wake up to this and I've got to make sure we're ready?
I am worse by the fact that we don't, logic doesn't prevail in the world. So, as the two blokes before me talked about, well, it's obvious, but to the Australian government, it's clearly not obvious, or there's some other things at play. So as much as you sort of think it's logical, it's going to happen, common sense is going to prevail, it doesn't. And then you start to sort of question what you're doing here. Why are we still in this? Because, the Japanese had a huge reaction to Fukushima. And by the way, it wasn't a nuclear disaster because no one died from nuclear accident. It was a natural disaster. We call it described as a nuclear disaster. So that media doesn't help that. The Germans then reacted. So California reacted. And all off the back of what? An accident that didn't kill anybody. So it really was difficult because of the fact you started to question yourself, well, why am I in this? Because I can't see an end if these idiots, can't use common sense. And I'll categorise the Australian government as idiots and our West Australian government as idiots. That's all right. That's what makes it difficult. You know that, yes, it's got to happen, but it's being held back because of ideology and also probably a little bit of money coming their way from different sources that, has affected it. So, yeah, it was a big problem.
And Andrew, operating obviously in Mauritania, again, you've had to hold the line, but there's a bit of convincing in Mauritania, as it would be in any country, to the importance of uranium mining. And we're distinguishing here uranium mining and nuclear power, because what each of you are looking to do is explore for and in time develop a project into a mine. How much is education important to this process?
Look, I think in Mauritania, we don't have a problem. I think the Mauritanian government really want commerce, essentially. They're a poor country. They want commerce. They had a good start in mining, but really they haven't had any mine developed for the last 10 or 15 years in the country. So they're really supportive of the uranium. And it sort of goes to show that they've set up, they joined the EIA, they've had a whole department sitting around developing the legislation around uranium or nuclear safety or radiation safety particularly. They do export radioactive materials through oil and gas waste products, but they've got a whole department that is really ready. It's more about educating the investors and the external parties that actually Mauritania is a very investable and good jurisdiction to do business, and they are supportive of it because they haven't had to go there. They haven't had to engage there. You know, BP's been there, but they're a big company. There hasn't been any real new mining and not a huge amount of exploration, but we are seeing a few new companies coming into Mauritania now. Some other Australian companies that are coming in and trying to do deals on various things, particularly iron ore. So we will start seeing some more renewed interest in the country. But part of the funding process, part of the you know, informing shareholders is about, you know, Mauritania is a real stable, real supportive jurisdiction for the uranium.
James, final question for you. This is an investor webinar, so this isn't a webinar on, you know, the uranium industry or nuclear or any of those sort of things. This is to educate investors on the sector and the commodity and why it should be a thematic or a sector they should be looking at. What's the message that you're giving investors? So, you know, not necessarily take away, but to not focus too much on the political and everything else. But what's the simple message you're giving Canaccord clients around why this thematic and this sector should be looked at for all them?
Yeah, first of all, I would never separate political from the thematic. In the case of nuclear, it's always highly political, right? And you're looking at it not just in the West, but also when you look across to China, right? And their 5 and 10-year plans, you want to see where those are all heading. So definitely, one, investors do not separate political and a thematic. Put them together. They all need to be in the hopper. For us, though, it really is driven by those 3 key megatrends, right? Electrification of everything. So we're going to see it in transport increasingly. We're going to see it required for all your data centers, all your AI needs. That's coming through, and it's going to hit us like a freight train. On top of that, you need to have the decarbonisation angle. I also believe in climate change, but at the same time, I support transition in natural gas, right? But nuclear is going to be a huge part of this. This is what's going to be necessary to get us to that net zero, because it is that big base load and it's the energy intensity. We don't need huge volumes of land to do a nuclear development, right? Or a uranium mine. And then finally, it's around the non-OECD growth. China and India continue to grow at a speed more rapid than the West, and they know that energy poverty kills, whereas we probably convinced ourselves that it's not really a big deal. Energy poverty is huge there, and so that is also going to help to drive nuclear and, as a consequence, uranium demand.
Now, I did say last question, but I do have a sort of an extension to something you just said. I'm always a firm believer, and I'm probably talking up the book of everyone in this on this webinar, that you've got to focus investment dollars on people who show commitment and people who commit to a project or a thematic, and really follow it. That, you know, there's going to be good times, you know, there's going to be bad times, but they're there to protect value. Do you think there's an additional element of look at those who've developed something or are developing something and are really focused on delivering a valuable outcome for shareholders and haven't just jumped on the uranium bandwagon in the last 2 months because it's hot and they've found something, you know, outside of a jurisdiction, but it's a cool thematic, but they've actually sort of stayed the line over a period and continue to add value for the project and the shareholders?
Yeah, I'm not particularly interested in companies where we believe that they're just here to mine the market, right? I want to be in behind companies which are trying to move forward with their development in a rational sense, not, you know, go too fast, do a line them up, Larry, and just move quickly and skip through all the feeds, but who are progressing in a measured manner their project so that they can meet the market. That's what we're interested in. We will look at teams. I mean, it's no point being an execution guy, project developer, and having sat on a project for 10 years. You probably should have moved on and used your skills elsewhere. You're looking to me quite like you're quite staid. But we do want to see people who are committed to a space and want to build mines rather than just raise the next lick of capital. That's how we view things.
Well, on that note, we've heard from 4 companies who want to build mines and want to develop projects and have stayed the line. And James, you couldn't have closed it any better for the 4 presenters we had here today. As I said in my introduction, the purpose of this Resource Connect Asia webinar series is to provide insights into the uranium sector from a thematic point of view, plus showcase a range of ASX-listed companies from within the sector. We found 4 cracking companies and a great keynote that I think really rounded this thematic and this webinar up well. James, your presentation, it was clear that the uranium sector will continue to see strong investor interest, and we hope that for the companies featured, this translates to reward for their shareholders as you continue to hit the milestones outlined in your presentations over the coming months. Thanks to James for his insights and his keynote, and to each of the company presenters for the introduction to your respective companies and the value proposition they represent. To everyone watching online, both here through Zoom, through YouTube, LinkedIn, Facebook, and other mediums, thank you for your participation. Everyone, have a great day.